In this video, we're going to look at the statement of cash flows. This is the format of the statement of cash flows, and we'll go through it when we are doing a problem. The statement of cash flows is one of the 4 required financial statements. This shows only cash transactions. We're still in the very beginning of your course, so you've only seen cash transactions, but starting next chapter on, you're going to see non-cash transactions. So whenever the company has non-cash transactions, they're not going to appear on the statement of cash flows. The statement of cash flows shows how cash changed during the period for the company. It also shows how cash was used or generated during the period. And we'll go through that when we go through the statement. This is a period of time statement, so which means we prepare it either for the year ended, the quarter ended, or the month ended. The statement of cash flows has 3 sections in the statement. If you see here, just the header, it says operating activities, then they have investing activities, and they have financing activities, and these are always listed in this order. Let's discuss what these 3 sections contain. First is always going to be the operating activities. These are cash receipts and cash payments relating to the company's day-to-day activities. So whatever the company does day-to-day, these will be in the operating activities section. So you're going to see things like money received from selling goods or services, paying salaries, paying rent, paying utilities, interest. All those things are considered day-to-day activities. So that would be in the operating activities section of the statement of cash flows. The investing activities section only contains one thing. These are cash receipts or payments relating to buying and selling long-term assets. When we say long-term assets in accounting, these are assets that are going to be used by the business or being provided a benefit to the business for longer than 1 year. So anything that lasts longer than a year that the company uses is a long-term asset. Things like land, building, machinery, etc., all those would be considered investing activities if the company buys or sells them during the year. The third one is financing activities. So this is how the company finances itself. And here we're looking at cash receipts and cash payments relating to either obtaining loans as well as paying off loans, or any cash transactions related to common stock, so investing transactions. This is investing by the owners. Dividends, which is paid to the owners of the company, is also considered a financing activity. So depending on the type of transaction, if it's a cash transaction, you need to be able to determine whether it goes in the operating activities, investing activities, or financing activities of the statement of cash flows. Let's do an example, and that'll help you see how we categorize these. We're going to continue with the same example we've been working with. It's ABC Company's Year 2 transactions. This section at the bottom shows how each transaction affected the accounting equation. Now we're going to use that same analysis to create the statement of cash flows. I have the statement of cash flows format here, and what I'm going to do is I'm just going to change it to reflect our activities because it is a lot of writing and I don't want this video to be too long and for you all to be bored by it. So when you're preparing the statement of cash flows, you start again with the header information. So this is ABC Company. Statement of cash flows, that's the second line, is the name of the statement. And then the third line is the date. So this would be a period of time statement. So it's for the year ended December 31st. And for this example, we're looking at year 2. So that's the only change for the header information. Now to get the numbers in the statement of cash flows, we said that only cash transactions appear on the statement of cash flows. If you look at the transaction analysis, the cash account column here have all the numbers that you need to prepare your statement of cash flows. Because statement of cash flows only has cash transactions, the cash account has all the cash transactions listed in one place. So that is the easiest place to find the information to prepare your statement of cash flows. As your company information goes more and more complex for later chapters, we won't be able to do it this way, but initially, just for you to understand how the statement of cash flows works, this is the best way to prepare the statement of cash flows. So we're going to start by looking at the format of the statement of cash flows and then looking at each transaction and determining where it should go. Let's look at the first line item. That is the beginning balance. So the beginning balance, I'm going to wait because that is not a transaction. That's what the amount of cash the company had at the end of last year. So we're not going to put that here yet. It will be in the statement of cash flows, but I'll come back to that. Let's look at transaction A, the 18,000 cash. So we know that it was cash, so it needs to go to the statement of cash flows. But which section? Operating activities, investing activities, or financing activities? Well, we know that $18,000 was cash from issuing common stock. Well, if it's issuing common stock, we know all common stock transactions should go to the financing activities section of your statement of cash flows. So here I'm going to say, well, it's already there. There's a header there. So it says cash receipts from stock issue. I'm going to say 18,000. I'm going to put that 18,000 as a positive number because we have cash coming into the company. That's a cash inflow. So our cash increased, therefore it's going to be a positive 18,000 for cash receipts from stock issue. Let's look at the second transaction. It says ABC Company received 110,000 by operating a parking lot on land. So here we got 110,000 in the cash account. What was that for? That was our revenue. That was by providing a service or selling goods. We were providing a service, letting people park in our land. That is revenue, and revenue is an operating activity. So this 110,000 was cash received from customers for services that we performed. Cash received from customers belong in the operating activities section, so I'm going to put that up here. That would be 110,000. Again, we had money coming in, so I'm going to put that as a positive number. Let's look at transaction C. That's 93,000, and here it shows money going out in the cash account. Let's read and see what that was for. It said ABC Company paid $93,000 for operating expenses such as salaries, utilities, maintenance, and interest. So this is money that we paid for expenses. We know expenses are cost of doing business, so these are day-to-day activities, and those belong in the operating activities section of the statement of cash flows. Now in this format that I provided, there's nothing called operating activities, so I'm just going to change that to say cash payment for operating activities. Actually, it's operating expenses. And that was $93,000. I'm going to put that $93,000 as a negative number because that $93,000 is a cash outflow. I'm just going to quickly change the format of these numbers so the parentheses show up and you can see that it's a negative number. There you go. Let's move on to the next transaction. Transaction D. So that's 11,000. You see the 11,000 as a negative number here. It says ABC Company paid $11,000 cash dividends to its owners. So this is dividends. which section of the statement of cash flows does dividends go to? Dividends are paid to stockholders, therefore it goes in the financing activities section. And I already have a line item here that says cash payments for dividends, so I'm just going to put my $11,000 here, and I am going to put it as a negative number because cash went out of the company. We paid dividends. Let's look at the next transaction. It says ABC company sold land that has cost $60,000 for $60,000 cash. So the company sold land. So when the company sold land, we received cash. That's where the positive $60,000 here shows up. So if we received cash, we're going to put that in the investing activities section because investing activities deals with sale or purchase of long-term assets. Here I already have a line item that says cash receipts from sale of land. And since it's a receipt, it's a positive number. I'm going to put $60,000 for that one. Next, last item says paid $150,000 cash to pay off a part of the loan from the creditor. Here under cash, we show a negative $150,000, so cash decreased by $150,000, and that was for a loan. So loans belong in which section? It belongs in the financing activities section. Anything to do with loans or stock belong in the financing activities section. So I do have a line item here that says cash receipts from note payable, but we didn't receive cash. We paid cash. And here's the line item that says cash payment for note payable. So in this particular line, I'm going to put negative $150,000 because we paid $150,000. That was the last transaction we had. That took care of all the transactions in between the beginning balance and the total. My statement of cash flow format still has a few things that are not filled. Well, they won't get used because we didn't have transactions that satisfied those items. What I did was deleted the rows that had those blank items. Now we can continue with the statement of cash flows. So here we go. We've got operating activities and we've got two items. So to calculate net cash flow from operating activities, all we do is we add these two items together. Again, when I say add, if there's a parentheses in that item, we have to remember to subtract it. So it would be 110,000 minus 93,000, which gives you 17,000. That is called net cash flows from operating activities. Next, we go into financing activities, and we only had one item under financing activities. So that item is just a positive 60,000. That is your net cash flows from investing activities. Next, let's look at financing activities. You had three items here. So all we do is you combine these three items. So 18,000 minus 11,000 minus 150,000. And we find that we had a negative 143,000 from financing activities. Now that you have your cash flows from operating activities, investing activities, and financing activities, you're going to add these three numbers together to figure out your net increase or decrease in cash. I'm just going to use Excel's feature to add those three numbers, and I find that $66,000 is a net decrease in cash. So since it's a negative number, we're going to call it a net decrease in cash. If it was a positive number, it would be called a net increase in cash. Again, how did we get this negative 66,000? We combined the positive 17,000, the positive 60,000. We added those two numbers together and then subtracted 143,000 to get 66,000. After that, the next line says, add beginning cash balance. Well, we know that our beginning cash balance is in this top line here. It's 237,000 from up here. So we're just going to type in $237,000. Now, to get your ending cash balance, you add the net decrease in cash to the beginning balance. You combine those two, so that would be $66,000 negative plus $237,000. That gives you $171,000 cash as your ending cash balance. We know that is correct because, as you can see, your cash balance total was $171,000. But if you didn't have this transaction analysis in front of you, you would compare this $171,000 to your cash in your balance sheet that you prepared earlier. And you can see that the cash in your year 2 balance sheet is $171,000 on December 31st, year 2. Let's scroll down to look at your final statement of cash flows. This is the 4th financial statement that is required in the set of financial statements. I know this video was long and complex, but take your time, watch it 2 or 3 times, rework the question, and that will help you understand how to prepare the statement of cash flows. If you have any questions, please let me know. Thanks.